Let's take stock of what the market sentiment is looking like. Nooresh, Kunal on the show with us as always. Kunal, let me begin with you. Afternoon, firstly. Does it seem like we could have hit some sort of hurdle in the near term at 19,800 thereabouts?
Yeah, good afternoon, Asha. So, in my sense, the pace of rally is slowing down, and I think that's a good sign because when you are increasing the base or the support moves up higher, and the pace of rally slows down, which means that the markets are not getting extremely aggressive. But if in the same time you have a lot of news flow getting digested, and especially the likes of TCS, for example, if that gets digested with not too much of a volatility on the indices, I would actually take that as a good sign or a positive sign for the index. And as you were rightly indicating that many of the Asian markets, as well as the global indices are also showing signs of positivity for themselves. So that could be, another positive for the markets, that even if you are in the range for the index and with a lot of news flow surrounding, I would still consider that as positive. The Nifty holding above the 50-day moving average, that's another technical, strong support level for the index. And now that we've confirmed a breakout above 19,700 mark, that is acting as a strong support or a base for the index over the very near term. So I think all of these factors indicates that the bias still remains bullish on the index.
Okay, point taken. So that's a take at the index level. But let's welcome on board Sandip Sabharwal as well. Sandip, you weren't very positive on the IT sector ahead of TCS's earning. Has your thought process changed at all after listening into what the management of TCS had to say?
See, I think there are times when we have to listen to the managements of companies, and there are times we have to sort of use our own brains. So I think this is the time when we are evaluating the technology sector. We have to use our own analysis and see where the entire macro environment is going. So the macroeconomic scenario for the IT industry is not very great. Say there'll be some specific IT companies getting to some specific industries which might continue to do well. But the larger diversified IT companies like TCS, Wipro, Infosys, HCL Tech, etc., I think they are facing significant headwinds of growth, and they are not going to go away soon. 2024, in fact, might be an even tougher year than 2023, which most of the analysts are not factoring in at all. They are expecting some sort of recovery to come in, but there is no logic behind it. So I think people need to be cautious about these stocks. They have had a decent run up in anticipation of bottoming of performances. That bottoming of performances, I think, is unlikely, at least for the next 2 quarters.
Next 2 quarters are going to be weak, but the question, of course, is the deal signings that they have done has to come on books at some point of time, and I think that's the reason why the street is penciling in the FY25 number.
Now let's take stock of what the charts though are indicating, because in the last few odd months or so we have been seeing some buying kicking in IT names. They've rebounded nicely as well, but the fundamentals and the way the stocks have been moving, they don't really match. What are you reading though?
Yeah, they don't match, and I generally look out for trends in prices, and prices are indicating strength across the IT names. Now, strength does not necessarily mean that these stocks would go into a vertical rally, but it says that these stocks may be less prone towards a sharp sell-off, and that's what I think we've seen for IT stocks over the last 1 year. And I think September 2022 was the classical month where many of these large cap IT stocks formed a bottom. Even in Jan 2023, when these stocks disappointed, I think if I'm not wrong in terms of results, or maybe in the next quarter, these stocks, they did not get into another sell-off or retest that September 2022 lows. And now in the last week or so, many of these large cap IT names like TCS, I think if I'm not wrong, maybe even Infosys, etc., many of these stocks had come back to their 52-week highs. So when these stocks approach into the results on a positive note, and if they are met with some sort of a disappointment, you're bound to see some sort of profit booking or correction into these names. But the fact that these stocks are significantly off from its previous major swing lows, the larger cap IT names specifically, I believe that the markets have already developed some cushion into these names. So net, my view is positive for these IT stocks, and I would expect that in case of this correction, say intensifies by another 3% or 5% broadly for likes of TCS or Infosys, that should be taken as a good buying opportunity.
Okay, that's the call coming in on the IT names. NMDC, Nalco, GAIL, IGL, and of course Coal India, that's where you're seeing the bigger moves come in right now. Sandip, any of these energy plays that look attractive?
No, I'm not buying any of these PSU stocks.
Okay, a complete no-no. The Coal India, Nooresh, I guess the prices talk a different story altogether. Can't keep away from the strength. You think there's further headroom to go for Coal India?
So the trend is positive, and this is one of the larger moves the stock has done after a really long time. So from 230 levels, the stock has moved up from September start from 230 all the way to 300, 310 zone. So out here, the case is the momentum is still strong, but it's getting into overbought zone in the short term. So one should actually be looking out for some bit of a pause here, but the trend is still positive. I would expect it to hold above the 290 mark. So trend positive, but at current levels, risk reward is not great. We could get into a pause, not necessarily a correction in a sharper way, some bit of a time-wise pause. But overall, the whole mining space looks interesting, whether it is Coal India or a NMDC, or even the broader names like a MOIL, etc.
So the entire mining space looks quite attractive. A lot of names which are actually doing cartwheels today. Look at MMTC, that's up around 20%. NMDC is higher by 6% as we flagged out. But what's the reap? Are you buying the arguments that the managements were making and looking at buying some of the hospitality names?
So I think among the hospitality names directly, so there are few players we can play in India. So both of them we own. So I think Taj at the upper end, like Indian hotels, and Lemon Tree at the middle and business travel end. So we are holding in both of them. I think next 3-4 years at least look very good for them. And depending on how the demand supply pans out, maybe beyond that also.
Sandip, what about Mahindra Holidays? You had it once upon a time, exited?
Yeah, because Mahindra Holidays, unfortunately, is not a customer-centric company. Most customer reviews tend to be negative. People don't get bookings, etc. So I think company which is not customer focused, I think long term they won't do as well. And timeshare as a concept was a great one at a time when Airbnb and these kind of holiday home kind of outlet systems were not there. And I think it's a concept which is sort of behind the time. I would say that it's a concept which is no longer relevant.
No longer relevant, but I think there is a bit of a speeding up in a couple of these two-wheeler names. TVS Motors, of course, is sitting at live-fire level. Yesterday, remember, there was a DAM capital note wherein they had substantially hiked the target price all the way to 3,050 thereabouts and maintained the buy stance because they said that the structural export story remains intact and it's likely to gain traction in the second half of the year. And on back of that, they were expecting a double-digit volume growth of over 30% in the second half of the year. Yesterday, there was also a note that came in on Hero MotoCorp from CLSA wherein they had double upgraded that stock. So a lot of these names are seeing action, and of course if exports do pick up, Bajaj Auto is also one of the names because they had been suffering on account of the slower export pickup. Anything you like, Sandeep, from the two-wheeler basket?
Yes, I think Bajaj Auto has been doing well. In fact, the management also indicated when they did the buyback. So I think there are companies there are some companies when they do the buyback, then you take it seriously, and that sort of indicates they believe that the stock might be undervalued, unlike the IT company which do it more for tax efficiency purposes. So I think that was a good opportunity to come into Bajaj Auto. Overall outlook looks fine for the company. TVS lately I haven't looked at, so I'm not sure what is going to drive a 30% kind of volume growth. I'm not really aware of that, but if that's the thing which is going to happen, then maybe the stock could do one well from here where it is.
Okay, just looking at some of the other movers as well in trade, and just want to check in on what the likes of some of the cement plays are doing. Interestingly, cement, of course, has been seeing a lot of buoyancy. Yesterday as well, you had the likes of an Ultratech, Ramco Cement, all perk up very nicely. And Citi has come out with a note saying that cement prices have been hiked in the southern parts of the country by a good 10%. Small increases seen in north as well as east, saying that the southern prices were not hiked all through the month of September and all other regions did witness an increase. They're saying that industry sources are indicating weak volume trends in the East market. But going by this precedent, it remains to be seen if the hikes in quantum in South and East sustain and implications for volumes as well. The other one, of course, is UBL, which is in focus as well. Nuvama has initiated a buy with a target price of 1935 on this one. They're also pretty bullish on not just, the consumption patterns, but also the appointment of the new MD and CEO as well. Sandip, I don't know how closely you're tracking the Elco-Bev industry, because both UBL, you had some very strong quarterly numbers come in from Sula as well. Just wanted to understand where you see this particular space headed.
So I've been tracking the sector, but not really buying into it so much because volume trends have been erratic and cost pressures have been significant in the past. And even and there are very few players. So UBL I haven't tracked so much lately, but United Space, Diageo, and Sula also I've been tracking. But then on purely on valuations, they don't look so attractive relative to what the earnings growth is at this point of time.
Pretty bullish on both Radico as well as UBL, right?
Yeah, and I've also added one more stock, that's Som Distilleries. That's also another stock. I think closer to 220, 225 is where we spotted the breakout for the stock. Now I think the recent high for the stock was around 375, 380 plus mark. So that's also another chart which looks attractive. And specifically for United Spirits, the stock completed a major breakout. I think it was a triangular pattern breakout, a flag pattern breakout for United Spirits at 900, 990 mark, and that was a range or the resistance where the stock took months to try and cross over those levels. So that's why I believe that possibly the breakout for United Spirits may not be a short-lived, but it could be a bigger breakout. And yes, the entire sector has started to look very attractive. Radico is something which also I think has bounced back from the previous swing lows. I think 50 DMA was the support for Radico, closer to 1100, 1120 odd marks. Stock has recovered more than 10%. So there are a lot many attractive names, but out of the entire pack, the two stocks, United Spirits, Radico, as well as Som Distilleries, is something which I'm bullish on.
Okay, so those were the top recommendations from the Alco-Bev industry. But just wanted to address the news flow that we were tracking on IDBI Bank. Seems like that the central bank, that is RBI, is looking to accelerate the vetting process, and that is likely to happen by October end itself. Do remember that the likes of Kotak Mahindra Bank, CSB Bank, as well as a couple of others had put in their bids to get the majority stake in IDBI, which is currently held by, of course, the government as well as LIC, and it is something that is likely to be resolved soon. So we are tracking that. But since we are talking financials, Sandip, which are the financials that you own right now or looking at positively?
I think among the larger banks, we only own ICICI Bank at this stage, and also Axis. So I think on both of these, I'm positive, and I believe that strategically they are well placed. Valuations are also reasonable. Although ICICI valuation ran up, but then it's consolidated for a long time now, and now it looks much better placed. PSU banks, I don't buy normally. Among the NBFCs, we do own Mahindra Financial. So the stock did well. Then there was this erratic quarter which led to a sell-off. So I think that's something we need to track how their performance pans out over the next 2-3 quarters.
ICICI Bank and Axis that you own, are you looking at adding positions at all, given the consolidation that even you are alluding to? Is it a good time to maybe add average?
Could be, but I think among the sectors where I would say it would be a preference to add would be maybe some in the large cap side, maybe some auto stocks, or look more on the capital goods stocks and corrections, and then the financials.
Right. Okay, Sandip, great to have you on the show as always. Glad that you took time out. Let's